All right. Hello there.
Hi, how are you?
Hey, Brian, I'm good. All right. Yeah, so today is Thursday, the 14th of April. It's probably still the 13th, where you're at, Brian.
Yeah, it's still the 13th here.
Okay, cool. So, look, a good morning, a good afternoon, and a good evening wherever you're tuning in from. And yeah, hope everyone is doing well. Hope everyone's staying safe. As usual, we have our special guest today, Brian Quinlivan from Santiment. A very big and warm welcome to Brian. Hey, just doing a
Yeah,
sound check. I think I can hear myself. Can you hear me? Okay, Brian.
I hear you well. Yes.
Cool. I hear you pretty well too. All right, awesome. So if you're tuning in, don't forget to share, like, and subscribe. If you're tuning in on YouTube, click on the bell icon. Make sure you choose all so that you'll be notified each time. If you're on Facebook, follow us. If you're on Twitch, follow us. Now, don't forget to tag your friends and your family whom you think may be interested in crypto, right? In this topic that we're going to talk about today. Now, don't forget to throw in any questions that you might have as we go through it, and then we will try to answer them as we go. All right. Well, obviously, this is a pre-recorded session, so that we'll answer it the next time Brian's on. Okay. So, without further ado, I'm gonna actually, yeah, I'm just gonna, the usual. This is not, none of what Brian and I discussed today will be financial advice. It is just two friends having a chat and having a look at on-chain metrics and sentiment analysis. Over to you, Brian, to introduce yourself, and then we can jump right into it.
Yeah, absolutely. So I'm Brian. I'm the marketing and content director at Santiment. I come on usually every 2 weeks or so. We missed the last 2 weeks, but typically I come on and show Andrew and all of the equities tracker audience about what we're seeing as far as the markets are concerned and how we can react to the divergences that are showing in the metrics. So what we're showing here is the last 24 hours of returns, where we can see it's been a nice sea of green. We had a few big standouts such as Bitcoin Cash, ApeCoin, Thorcoin, Aave, Chili's over here. But it's certainly been one of the better days after we saw a pretty tough couple of weeks in the past couple of weeks there in terms of price returns. We've seen some pretty sizable retraces, and we can look at the 7-day for comparison, and we see that they're still mostly in the red here. We do see a few standouts that are now in the green. Shiba, after its huge day, being listed. Andrew, remind me where it was listed. I can't remember.
I don't.
I just had it.
Yeah, maybe last year.
Shiba
Oh, what on
listing. I was on Robinhood. That's right. So yeah,
Yes.
Shiba was listed on Robinhood next to Matic, Compound, and also I believe it was Luna. Yeah, there were 4 coins that were listed. Solana, not Luna, excuse me. There were 4 coins that were listed. They all had a nice pump, but Shiba especially took a huge pump right after the news broke. And to illustrate what that did, we can actually look at our social trends page and take a look at just how hyped the crowd was after this announcement was made and how that affected the price. We can see right here, if we do social dominance, and we'll change the price to Shiba here, SHIB, and we'll type in Shiba Inu there. So now we can see what Shiba's price did around the time, and we can see it was the biggest social dominance spike that it had in a couple of weeks, and it really started to get going as the price was ramping up. This is pretty typical when it comes to any sort of pumping coin. The crowd usually gets in toward the tail end of it, and then all of a sudden, right here I'm highlighting it. This was pretty much right at the peak here, so it's clear that the crowd recognized the pump a little too late, and then it sort of flattened out for them, so they missed the train. So that was just one of the many stories we saw over the past week. And then we can spend the lion's share of this time, Andrew, looking at Bitcoin and
Sure.
potentially any other assets that you may have in mind. I know we've
Yeah.
looked at REN in the past, but anything else you have in mind, just let me know.
Yeah, definitely. Yeah, I think it's been an interesting. So Brian comes on, right? Brian's from Santiment. It's one of the best, on-chain metrics analytics site that I use on a daily basis. And Brian's kind enough to jump on, take time out from his busy schedule to come on every the second Thursday of every month. And so and we look at and we explore the world of on-chain metrics, because in the world of investment, this is not something that's common. Like, you will be surprised at how transparent investing in crypto is, because looking at the amount of information and data that's available, especially on this site, it'll blow your mind. So Brian, yeah, let's have a look at Bitcoin, maybe Ethereum, some of the majors. I personally, I'd be interested to look at Litecoin and Ren as well, to see how they're doing.
Yeah, Litecoin is definitely looking interesting, so we can touch on those toward the end. I know we
Sure,
touched on those two assets last time too, but if that's still good with you, we can do it.
sure.
Okay. So I want to start off by taking a look at one of our newest metrics here. This is the ratio of daily on-chain transaction volume and profit to loss. So basically, we look for really high spikes like this as a signifier that traders are taking profit on the respective network. So these yellow spikes are Ethereum, blue spikes are Bitcoin. Okay, so we're looking at two different assets at the same time. If they're in negative territory, that means capitulation is happening and traders are selling their coins while the coins are at a loss. So we calculate what price those coins were at the time they entered that address and what time they're at as they're exiting. And if they're below, they're in the negative. If they're above, they're in the positive. Typically, when profit taking occurs, that's when prices retrace. When uh, capitulation and selling at a loss occurs, that's when price bounces occur. And we can see it pretty clearly illustrated here. Um, we'll look at just Ethereum for the sake of, actually, no, since we have the price of Bitcoin, why don't we just take a look at Bitcoin and see how it looks by itself?
Sure.
We look at some of the biggest spikes here. Um, have one here where we saw a very small retrace. We have one here, which was pretty much right at the top, right before the November 9th or 10th all-time high, depending on where you were. And then we had a very recent one here on March 28th, so just about 2 weeks ago. And right after that, we started seeing the prices fall again, which is quite interesting. Really, what we want to look for is, now that things have retraced, are traders starting to take profit? So we look at, let me switch this to filled area there. There we go. So we look at this line right here. This one was the one in the negative just a few days later. And what do you know? The price bounce immediately started up the next day. That's typically how things go. Right now, we're in pretty much even territory. We're looking, oh, we're a couple weeks behind. Let me make this a little simpler. There we go. So we were looking way over here and over here, but we've got a couple more weeks of data. And it's been a lot of selling at a loss, which is good news. Sell at a loss, sell at a loss. A lot of people bought this dip right here. And when we got to the peak back up at 43K about 3 days ago, then a bunch of people were selling in profit once again, which sent the price down until they were selling at a loss once again as people panic sold here. And we've been bouncing ever since. We are back in positive spike territory by just a bit, but it's pretty small. But I find this metric fascinating, and it really gives a good glimpse at what traders are doing, whether they're selling while they're up, while they're down, and it really shows just how impactful that is on the markets.
Hey Brian, this looks similar to the 30-day MVRV.
Yeah, it definitely is. I can even overlay it and we can look at those together. So if I add that to this chart, we'll make it a 1-day chart here, which it already is. They are on different axes. Let me fix that. So we'll go,
This is
we just
really
need a
cool.
3-to-1 ratio. So we'll say 0.3 to -1. That's not going to work. I'll just do it on its own and get rid of the min and max. But yeah, overall, you're absolutely right. When things are positive like this, you tend to see corrections. When you see things get very negative, that's when the bounces occur. Especially if you see like anything on the 30-day MVRV, something that might be above plus 15%, right around here. And then anything below 15%, which would be right around here. Try that again. So these are kind of like the opportunity zones right here and the huge danger zone right up here. The closer the MVRV gets to it, the more likely a correction will occur. The closer it gets to down here, the more likely a bounce will occur. Break even would be that when average trader returns are right at 0 when you compound them all together. And really you're looking for traders being in pain as a sign to buy and traders being euphoric as a time to take profit. Right now, we're in a better spot than usual on the 30-day MVRV, and the price has been bouncing. So the MVRV is looking like a pretty good signal here alongside that ratio I just showed you with transactions and profit versus loss. Until things get up to 0, everything here will be considered less risky than the historical average time to buy into Bitcoin. So we really like this metric a lot, and it works quite well in tandem with that ratio.
So Brian, for that ratio, that new ratio that you just introduced, can we show the viewers how they might find it on the platform?
Yeah. So all you do is you're going to go to ratio in the search. You'll see it right at the top, the ratio of daily on-chain transaction volume and profit to loss. And you're going to add it to the chart, and it'll be there. Now I made a special axis so that I could see the lines below 1. If you look at the top left of my screen, see how the numbers are fluctuating below and above a 1. What I did here is I made the chart style a filled area. Filled area allows you to see both the positive and the negative. And then for the axis, I put a maximum of about 3 and a minimum of 1. And that allows me to clearly see when the negatives are occurring.
Okay, cool.
But yeah, it's right there at the top. Just type in ratio and you'll see it pop up. Most of the assets, if they're a top asset or an ERC20, you should have access to that ratio. And it's been a really, really awesome one. We're working on a Sandsheets model too, so we can see how the ratios are looking for a lot of them at the same time. That's going to be really exciting.
I'm looking forward to it. That's awesome.
Absolutely. So let's take a look at some of the other metrics that are going on with Bitcoin right now and see what we've been uncovering as of late. Circulation and daily active addresses. These are two of our top metrics in terms of extreme divergences when things really heat up. Like here, that's a sign that something is happening. When things really dip down, that's a sign things are happening. But overall, right now, circulation and daily active addresses, which are the unique amount of tokens and unique amount of addresses circulating on the network, they're both relatively neutral at the moment. We've already talked about MVRV a little bit. Like I said, better opportunity than usual right now. So that's a great sign to see. And then take a look at weighted sentiment. So this is measuring the overall social sentiment that's going on the Twitter and Reddit, Telegram, and Discord channels right now that we have public access to. And we compile all of them to see just how much social volume there is, multiplied by the positive versus negative score that we use by having a proprietary algorithm help do the calculations. Right now, we've been in negative territory actually since mid-February. This was a week before the Russia and Ukraine war was announced. So considering the fact that traders are not very optimistic about Bitcoin's future right now, this is considered to be a better spot than average to be in, because when the crowd is contrarian and not very high on Bitcoin, you should be, and vice versa. When they're super high and euphoric, like they were toward the tail end of 2021, that's the time where you need to be weary of a drop that eventually came just like this. So we really like this metric a lot. And again, it's showing a nice semi-bullish divergence right now, considering it's been slightly negative for about 8 weeks now.
Hey Brian, is that a like a drop off at the end, or is that because the data is not completed yet?
Yeah, it's because the data isn't completed yet. We're still
Okay,
working on
cool.
having sort of a better illustration of like a projection.
Yep,
But right now, if it's an incomplete day, or especially right now when the UTC day has just started, that's when
yep.
you'll see some weird drops like this. But it's best to just use
Okay,
previous days to give some good context there.
cool, cool. Thank you.
As far as supply and exchanges go, we're continuing to see a drop here. Going back 6 months, Bitcoin's supply and exchanges was sitting around 12.74%. They're now down to 10.14. So we're talking about a 2.6% drop in Bitcoin's supply that was on exchanges then that is not on now. That's a very good sign. And this is actually one of the longest sustained drop offs in exchanges on exchanges in Bitcoin history. If I go back 5 years, we can see just how long of a stretch it's been after things were really rising here, even before the initial, or at least the bull run that many people, including myself, started to learn about crypto happened back in 2017. The amount of supply and exchanges was actually rising quite rapidly. Huge rise in November as the bear market was really starting to peak. And then it continued a rise all the way up until early 2020. And pretty much for the last 26 months or so, we've seen a steady decline of Bitcoin on exchanges. And that's generally a good sign for crypto or whatever asset you're looking at, because it implies there's less risk of a future sell-off that can happen. So considering how far things have dropped off and how much less Bitcoin is at risk of being sold off in waves at any given moment, that's a pretty nice sign here as well.
Nice.
Now, going back to another metric that we really focus in on when we're trying to figure out where prices will go next, let's take a look at the amount held by addresses with between 100 to 10,000 Bitcoin in them. We see that these whales at their peak were holding about 49.5% back on October 24th, 25th. After a nice rise the last 4 days or so, we're up to 48.19, but it's still a far cry from where we were here. And, 1 to 2% may not sound like a lot, but it actually is when it comes to whale holdings. We've clearly seen evidence that the amount held by this particular group of addresses plays a major role in where prices will go next. And this is probably one of the most bearish signals we have, considering we really haven't seen a sustained drop off like this in quite some time. Probably the last time we did was December 2018 all the way until July 2019, where we did get a dip for a while. It was flat. This is kind of the end of the bear market. And then they really started accumulating after the final dip that occurred after prices really started to rebound and go back above, I think, 13,000 or so at the peak. But all things considered, we're still looking to be coming down right now in terms of this amount of supply held by whales. And until this changes, we have to be a bit cautious, despite the optimism we see from the other metrics we've looked at thus far. Now, on a similar note, we have whale transactions. And whale transactions, we're really starting to find a lot more alpha in as of late. If we look at just the last month, and we look at, we'll call it 4-hour intervals, we can see some pretty interesting things pop up here. For starters, when the biggest spikes occur, just as we see with some other metrics, that tends to be when corrections occur. We saw one of the largest spikes here prices dropped. One of the largest spikes here, prices dropped. After this dip occurred, notice how whale transactions began to rise again. That was accumulation for sure. And we saw that matching on that whale supply chart that we just looked at, where they were starting to accumulate once again. We'll see if this trend continues, but it is a good sign that we're seeing a few spikes like this with almost $3,000, $100,000 or more transactions occurring in a given 4-hour time interval. So whale transactions is something we can check out for Ren and Litecoin toward the end of the call too, Andrew.
Sure. Looking forward to it.
And let's see. We can also take a look at social dominance, which is interesting. Let's zoom this out to the daily view. And we'll zoom out to the last year. And Bitcoin is obviously an asset where we always want to see a fair amount of discussion revolving around. Right now, there isn't much. And even though it's a rebound from where it was really tanking back about 3 weeks ago, we still have a ways to go until, it's dominating conversations and there isn't so much discussion revolving around altcoins and assets that don't really move the markets the way Bitcoin does. So we want to at least be in this territory, 20% or above. That's usually a healthy spot for Bitcoin's social dominance. Right now, it's sitting at about 14.2%.
That's interesting, Brian. Given that the Bitcoin conference in Miami just ended, you'd expect the conversations to really pick up. I mean, I've seen some really good videos come out of the from the conference.
Yeah, it's interesting to see because we sometimes assume that there's going to be a huge uptick because of a conference going on. But the reality is the majority of Bitcoin traders may not even know about it and may not even have much hype. Or there's just, an altcoin pump going on at the same time that takes away the attention from Bitcoin. So there's many reasons that things don't spike up quite as much as they do. But it usually takes a little bit of time. Like I think this spike, because it was on the 11th, right, or the 12th, just a couple of days ago, that's usually when you'll see a little bit of a climb, but you certainly won't see, just a massive jump all the way to 30% plus in the course of a day, all because of a conference that was already anticipated. Usually the events that really trigger a lot of conversation are ones that came out of left field and caught people off guard, and suddenly everyone is breaking news as it happened. But because the news of the conference was already happening, the interest was already baked in a little bit, so to speak.
Yeah. Okay, cool. Hey, Brian, just going back to that chart earlier. So whilst that social the conversations around Bitcoin that were happening, it doesn't really signify whether the prices go up or down, right? Because from the look of that one there, even though there was quite a large dominance in terms of conversations happening, but you could see it like the price is coming down pretty.
Yeah, it's an interesting one. Usually the market is the most healthy and sees the most organic growth when you see social dominance up high. I zoomed out to 2019 to give some added clarity on that. When things get low, yes, the price was still going up, but this was where you wanted to start to be a little weary because, Elon Musk coin, Shiba coin, Doge, like all of these meme coins and coins that may not have a lot of intrinsic value, they start to steal a lot of the limelight because of their insane pumps. And that's when Bitcoin really starts to waver and we see a huge steep drop off eventually. So this is much more of a macro long-term indicator than something like MVRV or the ratio of transactions and profit versus loss, that kind of thing.
Okay, cool. Thanks for that.
Yeah. So I'm going to see if there's anything else we may want to touch on here. We can also look at some of the recent social trends. We did a really cool insight the other day about inflation and how that is often used as a bit of a fear marker. It can work in both ways. If prices are rising and then suddenly the crowd gets very concerned about inflation, that's when you'll see a local top form and prices will decline. If things are more down or flat and you see a big marker concerned about inflation, that can actually mark a bottom because it's happening as people are looking for an explanation for why the prices are down. And when they find that explanation and they scapegoat something, that's often when fear takes over, capitulation happens, and prices rise. The same thing happened. Yes, it wasn't nearly the spike that we saw here or even here, but this latest one, because of the consumer price index report that came out in the US, this had a nice little spike and actually marked pretty close to a local bottom right here. Price was at about 40. It dropped to like 39.5 before taking off once again to where it is now at 41.3. So inflation is a really good keyword to keep an eye on right now. You can also always look at CPI, even though that's probably already run its course here, but you can see how big of a spike there was.
Yeah. Yeah, that's interesting. That's an interesting correlation.
Yeah.
Yeah.
And then, of course, we have like buy the dip calls, where we saw a lukewarm response to this dip, but it really wasn't anything that amazing, right? Like there were a lot of people that did not think this was the dip to buy, and since they didn't, that actually increased the chances of it being the dip to buy. On the contrary, you know, when we see a large spike like this, it can sometimes actually mean that the dip is going to continue because the crowd is all expecting for the price to bounce up right there, and then it in fact goes further down until the discussion related to the dip dies down a bit, and people can be caught off guard by this kind of jump.
Yeah.
So people's lack of optimism was actually rewarded with a nice jump up in price.
Yeah, that's good to know, right? Not to go with the crowd or listen to the crowd.
Totally, yeah. You definitely want to be a bit of a contrarian.
Yeah.
We can also look at an interesting phenomenon, which is Ethereum's continued correlation with the S&P. Let me pull it up here. And what we have, let's zoom into the last 6 months. That should work pretty well. So Ethereum is here in green, the S&P is in blue, and then gold is in gold. You can see, especially in the last 3 months, I'll zoom in a little more. Look at how much Ethereum has really stayed tight to where the S&P has gone. It's absolutely uncanny. And overall, we would prefer to not see correlations between crypto and equities. Obviously, you cover both a lot in your channel, but typically we see crypto pumping the most when equities are far away, you know, a non-issue in terms of how it's carrying crypto or how crypto is carrying equities. We want to see zero correlation, not a anti-correlation, not a true correlation where they stay pegged like it is now, just crypto doing its thing, equities doing its thing. That's when the bull runs typically occur. We look back to, let's go like the last 5 years and really take a long view on this. And we can see like Ethereum was just absolutely making its run up, but it did so after the S&P already did it itself much more rapidly from Black Thursday all the way up to August. Crypto kind of waited until September to really get rolling. And that was as the S&P was dropping off. So that was kind of a sign that a bull run was right around the corner because they were not relying on each other as they are now. We can also see like right here, you know, the S&P was going up, crypto was going down. That was a time where they were like on an inverse correlation to each other. But eventually, you know, things kind of just move in their own directions. And that's when we see the best results from crypto.
Yeah, it's interesting. Do you think the reason behind the close correlation is because in the last 24 months, you have, Wall Street guys or,
Yes.
come into the crypto space.
Yeah, I think that's absolutely the reason. There's a lot more retail trading going on than there used to be. Many more people who overlap their trading between crypto and equities compared to 2017 and early 2018, that last huge bull run,
Yep.
where it was just all crypto for
Yeah.
the most part compared to now. So it's a big difference.
Yeah. Yeah. It's interesting to watch the market evolve.
Yeah. And
Yeah.
it's also fascinating to see that Ethereum is much more tightly related to the equities markets than Bitcoin is. So if we change it to Bitcoin, not quite the same. I'll overlay them together so we can compare. Might be, I'll get rid of gold here because it's not as relevant. And I'll
Yep.
add Bitcoin here. So Bitcoin is kind of, especially right here, like it's really jumping up while the S&P stays flat.
Mm.
It was going down a lot more when the S&P was going up. So in short, like Ethereum is just like on a percentage basis staying much tighter to what's going on with Bitcoin with the equities markets right now. And until that changes, here's a really clear example. Ethereum is like right on that line, whereas
Yeah.
Bitcoin is in a much different spot. Until that changes, it appears as though there's a bit of like a shift in, uh, you know, Wall Street trader interest, where they're much more in tune with what's happening with Ethereum compared to Bitcoin, and that can have some interesting results in the future.
Yeah. Yeah. I'm just on the back of my mind, I'm just thinking whether or not it's because of, you know, um, crypto influences like guys like Raoul Pal and
Hmm.
Mike Novogratz, and because they have taken a stance. For example, Raoul's taken a stance, a very large position on Ethereum over Bitcoin, and I wonder whether he's had an influence on the Wall Street guys who have who listen to his podcast and stuff, and
Right.
then get influenced by that. Yeah.
Yeah, there's a lot of reasons, I'm sure. I mean, more and more people who are coming in are coming from the equities markets. It's people with money as opposed to, the early 20s crowd that came in 2017, where it was much more just speculation. Now it's
Yep.
kind of like crypto is a thing and it's going to be here for a long time. So much more established traders who are used to making money are now trusting crypto, whereas they didn't during that 2017 and 18 run up.
Yeah. Yeah. That's interesting. Very interesting to watch it evolve.
Yeah. And we can also look at another thing that I've been keeping an eye on, which would be development activity. We talk a little bit about altcoins and we transfer over to a discussion about them for the last 15 minutes here. I have a hard stop at about 15 after the hour, Andrew. So I'll try to
Sure.
keep this part brief and then we can look at Litecoin and Ren really quick.
Okay.
Um, so if we look at development activity, what we're doing is we're checking out the total amount of notable submissions on the asset's respective GitHub to see just how active their team is being and how much they're trying to innovate and improve the project. Now, we have a good article that was written a couple of years ago about how we track and why it's so important. And we found that there are three real key ingredients if a project is showing an increasing or high amount of development activity. They either believe the project will be successful, it means the project is shipping more features, or there's much less probability that it's just an exit scam. So if we look at something like, I don't want to name any projects actually, but there's plenty of projects with very, very little development activity that you guys can check out on our platform. And it will be basically a validation that you're in a very shaky asset that at any given time might fall off a cliff. And you want to, of course, avoid that. And the best way to avoid it is to ensure that you're looking at development activity, uh, assets with development activity that's on the rise. So if we go back here, check out the screener. And we again sort by development activity. Let's take a look at some of the top projects. Uniswap is absolutely dominating. It's getting about 1,350 notable GitHub assets per day. And this excludes things like a simple Slack message or routine update that is expected every day. We filter those out to make sure it's only things that actually matter to an asset's improvement over time. So Uniswap, huge development activity. Coming up in second is Solana, which is at about 400 development activity submissions a day. Status, which many people may not know about, it's 256th market cap asset, and by far the lowest market cap asset within our top 15 here. That's the third most developed. Polkadot, Kusama rounding out the top 5. We also have Filecoin. For a while, Cardano was in the top 3. It's now down to 7th. Ethereum, it was up in the top 5 for a long time, but it fell out recently. It doesn't mean that the development is any less than it used to be. It simply means these assets are getting more and more development activity per day. And then Chainlink, a very popular asset in the social crowd. IOTA, Cosmos, Gnosis, Elrond, Decentraland, and Internet Computer round out the top 15. So if any of those projects are ones you guys have been keeping an eye on, this is a welcome sign to see that they are getting plenty of innovation and attempted improvement from their corresponding teams.
Cool. Nice.
All right, so we'll take the last 10 minutes here and check out what's going on with Litecoin and Ren here and see what we can gather. I want to take a quick look at Litecoin's ratio of profit to loss to lead things off. So not too much special going on. We do see a bit of a spike here in our most recent day. It may not be the most notable one, but it's something. We see the big one that happened here right before its huge local top in November, another one here right at a local top. And then we started seeing some that indicated a bottom was forming down here. So this one coming up right after prices were suppressed, that would tell us that whales are accumulating, not dumping. And that here, this would actually be the dump spike because it's happening as the price is rising. So those were very good alpha. Another accumulation one here, while prices stayed flat for quite a while afterwards. And then a few decently high-end spikes here, but not a lot of a reaction to it yet. So it seems like they are loading the chamber in some way. And maybe we can look at a few other metrics to see what some of those spikes mean. All right, so circulation, pretty flat right now. Not too much to say. Interesting little drop off here where there was almost no circulation. Daily active addresses does appear to be declining a little bit. So not the best sign there.
Yep.
MVRV though, take a look at 30-day MVRV. So this is the opportunity line right there. And we are well below that. We'll give it a hard refresh. Sometimes it doesn't load the full screen correctly. There we go. So ever since April 5th, we have been in an opportunity zone for Litecoin. And that's a very solid sign for its future, considering this is the lowest it's been in the past 6 months. We could even zoom out to the last year, see how long it's been.
Wow.
Yeah, so Litecoin has been underwater this much, hasn't been underwater this much in about 11 months. May of last year was the time where we really saw that crypto-wide drop-off that caught a lot of people off guard. Yep. And eventually we saw a bounce. But right now, this looks like a much better opportunity to buy Litecoin when it is not risky to do so compared to usual. So that's probably one of the most bullish MVRVs out there right now. And then weighted sentiment, you can tell because not many people are talking about Litecoin right now. It's been
Yeah.
very negative for quite a while. Just
Mhm.
like Bitcoin, since mid-February, it's been negative, but even more so. These are some really low standard deviations below the normal amount of positive versus negative comments, especially way down here. So that's another good sign. Not a lot of optimism toward Litecoin means buying in is going against the crowd, and that's usually a positive, smart thing to do.
Interesting.
Let's take a look at Litecoin's key whales. So it's at about $110. I like to look at the 1,000 to 100,000 tiers for Litecoin, because then we're looking at people holding it about $100,000 all the way up to 10 million or so. That's our key whales that don't quite go into, all exchange address territory. And we
Yep.
can see a very good sign on Litecoin's end here. Huge whale accumulation here just about a
Wow.
week ago, where they were holding about 31.2%. And just a couple of days later, they peaked at 33%. So that's, a 1.8% increase in these whales holdings on Litecoin, one of the second oldest asset out there. That's a pretty big jump. And it's been a pretty big accumulation fest since June 20th of last year. So we're talking about a 10-month stretch where there's been steady accumulation. Obviously, this was a bit of a drop off, but after that ended, we saw a nice resume, and they made up for lost time just over this last week with that huge accumulation spike. And yeah, it looks like they've added about 13.7, 13.8% of 13.8% more to their bags over that stretch of time.
Wow. And that's from June last year till
Yeah,
now.
10-month
Wow.
stretch.
Wow. Okay.
Very interesting.
Yeah.
And
Especially
then
that last
uh,
stretch there where it kind of just jumped.
I know,
Yeah.
this is one of the biggest spikes I've seen an
Yeah.
asset
Wow.
have in quite some time, especially an established one like Litecoin.
Yeah. Wow.
And then, of course, whale transactions is also very interesting. Take a look at this spike here. Huge accumulation spike right around the bottom here. Uh, yeah, so there were a total of 4,379 whale transactions that amounted to $100,000 or more in a 12-hour stretch. If we make it a one-day stretch to simplify, this was, yeah, about 5,100 whale transactions that occurred right at this bottom here on the 11th. And what do you know? The price has been rising ever since, but it still looks to be very early, assuming that this metric doesn't turn things around and we see a dump spike like
Yeah.
we saw here. This was a dump spike. This was a dump spike. Even this we could call a mini dump spike here. Pretty much all of the big spikes, you see some sort of price direction change, which is why this metric is so valuable. Look at all the ones that occurred right at the local top back in May, right before the drop off. So many people clearly knew this was coming.
That's interesting.
And now I'll just transfer over to Ren and we'll close it off with a little more analysis here.
Sure.
Circulation, we saw a few big spikes, but all in all, it's settled down and doesn't appear to be doing much. Daily active addresses doesn't look great. It's been on a decline for the past year. We'd
Mhm.
like to see it start to pop up and show a few spikes like this, as it did during its big rally back in the third quarter of 2021. For now, pretty dormant though. Ren does appear to be well in negative territory for MVRV. So that's the opportunity zone. We actually got below it, and that was perfectly marking the bottom. Now we're
Nice.
above that line, but still very much in a less risky spot compared to normal. We can see really huge spikes down here where the average trading returns were below 40%. And that was a very clear sign that things were going to bounce soon. But overall, it looks pretty good on the MVRV side. That's a bullish sign for sure. Weighted sentiment, not much to say, pretty flat at the moment. Supply and exchanges is interesting. We saw a big rise in exchange supply around the 22nd and 23rd. And I'm
Yep.
curious as to why. You may know more than me because you're a Ren expert, Andrew. Do you have any idea what could
I
have caused this?
Yeah, that's interesting. I actually saw that spike happen. I think that was 60 million ren that got onto exchanges, and and but then I haven't actually seen a massive dump yet. So they're still sitting on exchanges. I have no idea.
Yeah,
Yeah,
fascinating.
yeah. I mean, based on that, Brian, would you expect I mean, one would be expecting a massive dump, right? I mean, why else would you be sending, 60 million ren onto an exchange?
Right. Yeah, it seems likely. I mean, there's an argument that it already happened because we had the big correction for Ren occur
Okay.
on on March 30th, where
Hmm.
prices fell a total of about 33%. So that's a pretty big dump in my opinion. Whether it
Yeah.
was directly related to the coins that were moving on to exchanges,
Hmm.
hard to say. We can check out the whale metrics as these last few that we look through and see if there's any evidence there.
Sure.
So Ren is priced at 35-ish cents right now. So we'll probably want to look at 1 million to, yeah, we'll just look at 1 million to 10 million by itself to see how it looks there. Because if we go to 10 million plus, it's going to be a ton of exchange addresses.
Yeah.
Yeah, it looks like overall the accumulation has been there. If we look at the last year, they were holding 29.7%. Now they're up to 35.7%. So nice 6% uptick by this 1 to 10 million Ren coin address tier. That is a nice vote of confidence, in my opinion.
Nice.
And let's check out whale transactions. Actually, the ratio of on-chain transaction volume and profit to loss could be interesting too. It does look like there was a pretty decent sized spike here just on the small rise. That's a bit concerning. I'd be a little worried that people are taking profit just off of this small rise. And it's a bummer that that's happening after such a big drop off. It means there could be a little more downside before we start seeing bottom indicators that look like this or this.
Hmm.
Probably a bit of a bearish indicator there. But on the
Yeah.
whale transaction side, not much. Unlike Litecoin, there isn't a ton of activity going on right now. If you look at the top left of my screen as I hover, the last 4 hour or 12-hour interval, there were 10 total transactions that were valued at over $100,000. This is a bit of a spike, relatively speaking. And we did see a price bottom right when it happened, but it isn't a big enough spike for it to be a great vote of confidence that we're about to see a huge reversal. This was, of course, a great reversal sign. If you were seeing a ton of whale transactions as the price was soaring in mid-December, that would be a great take profit sign, as was this spike, as was this spike as well. Most of these big spikes, it looks like whales are taking profit. And this one probably would be included on that, even though it was a few days after the official local top. But right now, look for a few bunches of spikes like this, like we saw right at the bottom in late January. That would be a great telltale sign for Ren that things are going to start to turn around soon. Right now, I'd call it a little more neutral, where Litecoin looked a little more bullish based on our historical metrics.
Sure.
So yeah, that's where we are with the markets, Andrew. Do you have any questions for me? Anything that you think your community may want to know before we close out?
Yeah, no, thanks. Thanks again for coming on, Brian. I just want to reiterate how, what a transparent market that crypto is, and as an asset class, you don't see this amount of transparency in capital markets, in stocks, right? So so this is just amazing. I mean, once you study, you spend that 100 hours, figuring out what each of the metrics could mean, and then you start, looking at it together. I think that's when things start to, that aha moment, right? That's that light bulb moment, and it's just definitely one of the best platforms out there. Anything that you'd like to say, Brian, before we finish it up?
No, I just hope you're all staying patient out there with the markets. It's been wobbly as of late. Go Bitcoin being at 48K a couple weeks ago, now back down at 40, 41, even getting as low as 38.5. So it's, if you're trying to trade every small peak and valley, just be careful out there because it's pretty unpredictable, even with all these metrics. We're trying to look at things that are a little more macro right now. And it's all about trying to keep a level head and understanding that if you're one of many people who is bearish on Bitcoin or the crypto markets in general, that may not be such a good sign that your opinion is correct. You want to try to be a little bit counter to what the crowd is believing. And right now, the crowd believes that the price is going to go down, and that's why we're a little more optimistic here at Santiment.
Thanks for the wise words, Brian. Definitely, it definitely pays to be a contrarian. I mean, going with the crowd always feels safer, and it takes a lot of courage to to break it down, like into data, and then letting the data tell the story, and then you making a decision based on that. So
Yeah, totally well said.
Yeah. So hey, Brian, thank you again for coming on. Looking forward to our next session, which is the second Thursday of next month. Hope you've been keeping well. We didn't get to exchange pleasantries when we when we jumped on. We went straight into it. Hope you've been well, and things have been going well on your end.
Yeah, things are all great, and I really hope everything is good on your end as well, Andrew.
Yeah, no, but it's been yes, been busy, been very busy. And yeah, okay. So I guess we this is where we say goodbye. And thank you for your time, Brian. I hope you have a nice evening. Dinner time now.
Absolutely. Yeah, I'm gonna go grab some dinner. Don't forget, guys, equities tracker. If you are purchasing the Pro or Pro Plus plan, you get 25% off your first month just by entering that code, equities tracker, all caps. And we would love to show you around. Let us know if you have any questions, and wish you all well.
All right. Thank you, Brian.